Hi everyone, my name is Curtis. I'm at Staked, handle business development here. We are a staking service provider, and the reason we're both on stage today is both Staked and Figment are part of Liquid Collective, which is a liquid staking service similar to Lido. So that will be the overarching topic today.
Thank you so much. Yeah, happy to be here today with Curtis, representing Figment. So my name is Ben Spiegelman. I lead the corporate development effort for us. Figment is an infrastructure company which helps institutions earn reward on their digital assets. And so, yeah, really excited to talk to you a little bit today about staking, what we're doing on the liquid staking side, and how we're partnering together. And yeah, happy to answer any questions as well.
So Ben, you want to start us off with maybe, there's different types of staking out there. It kind of gets used to mean different things. Can you, for the audience, maybe describe what you and Stake focuses on from a staking perspective?
Yeah, for sure. So I think even going back a little bit, when people think about, okay, what is my crypto journey? The first thing is, okay, how do I buy it? Then is it, how do I protect it? How do I trade it? And then eventually it's like, how do I earn rewards on that crypto? How do I make this investment grow over time? And one of that pieces is appreciating on the price, and the other one is the rewards that you can earn. Some people call it yield. We try to stay away from that terminology based on what we do. But when you think about that, there's sort of two options. You can either lend the assets out, whether that's in CeFi with traditional lending mechanisms, or in DeFi pools, with liquidity pools and yield farming. And then last but not least is the staking category, in which Staked and Figment both fall under. And so this is really at the core of the infrastructure layer to be able to secure the protocols. And so if you are a holder of any of the proof of stake assets like Ethereum, Cardano, Avalanche, and many others, if you are willing to delegate your assets to a provider like ours, you can actually participate in the consensus mechanism that helps approve and secure these networks. And for doing so as a reward, you actually receive more tokens in the native token that you stake it in. And so it's similar in the mining industry, where you put more electricity, then you get more Bitcoin. Very different in staking, where the bar is much lower to enter into that market. And so you can work with a provider like ours as long as you are a token holder. So for Ethereum, for example, if you have 32 ETH, you can delegate those assets to us or to Staked, and you can participate in the consensus and earn rewards. And so it's a really, really great way to do so, and comes with a lot of different risks that are associated with lending. And obviously there's been a lot of risks over the last couple of days we've seen starting to unfold. In the lending market, in the over-collateralization market that we've seen with Celsius and Voyager, and it's totally different with staking. And so when you actually do stake your assets, it is one-for-one collateralized to the protocol. So if you hold Ethereum, you stake that asset, it is locked up, and then you receive those rewards. And when doing so, you're not able to then have more margin or other things that obviously are where a lot of the issues and risks come in that have happened in traditional finance and now in crypto.
Yeah, I just add to that, another way the risk profile is different from, say, like lending or even like DeFi protocols is it's a non-custodial service, right? So, everyone uses the term, not your keys, not your Bitcoin, or not your crypto. A lot of the recent tragedies we've been seeing this year in crypto, a lot of that has to do with giving up assets in a custodial manner to a counterparty that then doesn't use it responsibly, right? So I would just point out that's the other risk. But yeah, it doesn't mean it doesn't come with any risk, right?
Yep.
You have to run validators properly. That requires being able to manage the keys properly, being able to avoid getting slashed or having downtime. So that's primarily a reason why you would use a professional service is you want to avoid making those mistakes by running it yourself.
Yeah, exactly. I think that's a good point, right? So when you think about where do we come into the fold versus your custodian or your exchange where you're trading those assets. And so Figment specifically, right, we work with a lot of the largest institutional service providers in the space to be able to help power their staking infrastructure for them. So Fireblocks, BitGo, Anchorage, Blockchain.com, a lot of these large firms where they are distribution points for folks, both retail and institutional, to manage, buy, sell, trade, and hold, right? They're the ones that are the experts in that. And then a firm like Figment is the ones that are actually running the validator nodes, doing all the performance, the governance, the validating of the transactions, and doing it embedded in those actual channel partners, whether they be custodians, exchanges, wallets. And so we don't actually manage the keys on your behalf, but you're a trusted third party who is going to be a regulated entity, hopefully, depending on what jurisdiction you are, to be able to manage those assets. On the other side of the table, Staked and Figment, right, we are non-regulated entities, except for, I guess, you guys are bought by Kraken, so a little bit different there. But as a staking provider, we really are truly a technology provider. We don't hold customer funds. We don't hold customers' assets. If we were to go away tomorrow and blow up, then you could go and redelegate your assets to Staked or to another provider. And so I think that really is really key for us to stay sort of in our area, and helps mitigate the risk for both institutions and for retail investors.
Should we talk a little bit about Liquid Collective and what liquid staking is all about next?
Yeah, happy to do that. So staking is sort of like 1.0 of earning rewards on your proof of stake tokens that we talked about. The next iteration of that's starting to come is what's called liquid staking. And so when you stake your assets, as I mentioned earlier, that asset is locked. There's a bonding period in which you can't withdraw your assets. And that is set by the protocol itself, so by Ethereum or Cardano. And it's typically very different. It could be 1 or 2 days, or it could be 30 days. And so what a lot of institutional investors have started demanding for is, I want to be able to be moving in and out of my positions much faster, but still earning rewards on that. And so about a year ago at Figment, we started working on a liquid staking solution. And so this really means that you still stake your assets, and then you receive a receipt token, which is a representation of your assets that are still staked, which you can then use in the secondary market to trade in and out of the position, to use as collateral, or for other different mechanisms that you want to be able to use your assets for, so they're not entirely locked. And so we started working on that. Initially, we're about to go live with that solution about 6 months ago. And then we met our friends at Kraken and at Coinbase, and they were like, listen, we love what you guys have built. We think there's a much bigger opportunity here to make this a more Web3 initiative, to make this a broader thing than just Figment, or just another siloed pool of liquid staking and having so many fragmented solutions. And so the idea was, can we come together to build one protocol that is then spread across the entire ecosystem, where we include Kraken, Coinbase, many of the other institutions, the custodians, the wallets, other validators in this ecosystem, to build the most robust liquid staking solution that ultimately then has the most liquidity, right? The more participants, the more assets, the more liquidity, the more safetiness of the overall ecosystem. And so that's what we did. We spun the company out, and the new entity is called the Liquid Collective. Liquid for liquid staking, and then obviously the collective of us all coming together. And so it was started by Figment, another validator provider called Kiln, Kraken, and Coinbase, and now we're expanding much, much further to include a lot of other institutions, and should go live this quarter, and so we're really, really excited about that.
Yeah, so Ben, this sounds very similar to Lido.
Yeah.
Who does Liquid Collective target, or who would be good for Liquid Collective, and why would someone go with Liquid Collective over Lido?
Yeah, it's a great question. So for those that don't know Lido, Lido was probably the first and largest liquid staking solution that was out there, specifically for Ethereum. And so the big difference that I think that Liquid Collective brings versus Lido is a pure focus on institutions, right? And being able to be that true enterprise customer that we're going for. And so what does that mean? It means that we have a select group of validators that are trusted, that are audited, that are being very, very clear on what they do and have really, really clear risk parameters. So the 3 validators that are starting out are Staked in Kraken, Coinbase and Bison Trails, or Coinbase Cloud, and Figment. And so 3 of the largest infrastructure companies in the entire world are coming here and saying that we're doing that. So working with great partners on the validator side, working with really strong partners on the tech side, and then all of the integrators, like the Coinbases, the Krakens, and the Figments of the world, that are distribution points for how you actually participate in the protocol. They're making sure they're KYCing AML checks for every single person that's coming onto this platform. And so we actually know who the users are. We're checking OFAC lists, all of those things that are sort of necessary for an institutional product that we really want to bring to the market. And so that's sort of, I'd say, the majority of the things. We're continuing to make sure it's all about safety. So we have a security audit that was done by 2 outside firms on the smart contract protocols. It's really as far as we can be an institutional enterprise grade product. and then we're going to be as transparent as possible. And so you'll see over time iterations. Today, it started as a central company, but we'll be transitioning over time to being as open and as transparent with the community as we can be.
Yeah, I mean, I think the general trend we see today is, even 2-3 years ago, it was this complete Wild West, right? And I think a lot of the maximalists, even today, have this vision of like absolutely no regulation, complete freedom, complete censorship resistance. And I think a lot of that is very important today, right? This movement wouldn't happen without some of those principles. But it's also very clear today that there's a lot of money, there's a lot of interest, there's a lot of, really the entire financial sector, I think, looking at the sector and wanting to participate. But, whether it's current laws, whether it's international laws, right? Whether it's, even just from like a pure security or an infrastructure access perspective, there's just a lot of hurdles for why a party that is interested in participating just can't, right? And so I think Liquid Collective is one of many solutions to get more participation. Will it look the same as it does today in 4 or 5 years? Maybe not, right? Maybe laws will catch up. Maybe as the world becomes more comfortable with digitally or natively digital or crypto services, Liquid Collective will also look different. But I do think in today's environment, having these rails of like AML, KYC, making sure that it's compliant from an institution perspective is really important.
Yeah, and I think, listen, we are in London, so hopefully no one gets too upset with me, but I think like what we've seen in the US with really strong regulation, not necessarily as clear as we would like it to be, and hopefully over time it'll get that way, but Coinbase and Kraken, some of the most regulated entities in our entire space, have been really, really good stewards of capital, right? And you've seen that over time, the way that they're really preaching security and not going into the riskier assets. And we've seen issues overseas, right, where companies haven't followed the same steps. And we're seeing that obviously in the last couple of days. It's starting to unfold. And so I think there is some type of benefit to going a little bit slower, right? We can't always be first. We want to make sure that we're doing things properly, partnering with the right folks and knowing actually who your counterparties are and trusting those counterparties. And so, I give a lot of credit to these guys and to the Coinbases of the world who are willing to say, okay, we see there's massive growth and opportunities globally and things we could run at. There's always going to be shiny objects, but doing things properly and making sure that even if there isn't regulation that's clear from the government, that we're following the principles and standards that are traditional in most asset classes in the US and typically in Europe and in the UK as well. And so I think it's those types of institutions that are leading the way, and maybe they're not as sexy as they were 2, 3, 4 years ago, but they've been tried and true and continue to kind of succeed in the steps going forward.
Yeah, I think we're almost coming up on time, but lastly, like how does someone get started? And is Liquid Collective live today? Can you share a little bit about that?
Yeah, it's a really good question. So, as I said, they will be launching imminently, probably in the next couple of weeks. They probably would be upset that I shared that, but it's okay. That's very exciting stuff. So Q4 for sure. And so when it is live, I would say there's going to be distribution partners that you can buy this through and participate in actually staking your ETH and being able to receive this receipt token. I would think it would be pretty safe to assume that Figment, Kraken, and Coinbase will probably be places where it'll be live. I don't want to speak on behalf of them, but I think all three of those venues will be opportunities for people to come and participate in this protocol. And we will be sure to be very loud and proud when we do announce, and so be on the lookout in the next couple of weeks.
Awesome.
Thank you so much, everyone.
Thanks, everyone.
Yeah.
Gentlemen, hold on. I got some questions. That was excellent, by the way. Great presentation. You guys have been dropping value like you wouldn't believe. Interested to know, when you look at a smart contract audit, how do you approach that, and who actually did your smart contract audits? I think you said 2, Ben. I'd love to know who they were.
Yeah, I know Halborn did one of them. I don't remember who the second one was, but I think the thought was that having redundancy always makes sense, so that's why we did a second one. And again, I think the plan here is to be as public as possible, and so we remediated a lot of the issues that were there and are going to be publishing a lot of the results and all of that type of stuff. So as much as we possibly can be kind of following that Web3 ecosystem of everything on the table, and hopefully that makes us honest and shows what good actors we are.
Brilliant. Well, sounds very compelling. So how can people know more about Liquid Collective? Is there a website, a Twitter handle, or how can we get connected with that? Because unfortunately, we didn't have anything on the screens, but I'd love to know more about it.
Yes, there's definitely a Liquid Collective website. I don't know what it is.
Yeah, I think right now, alluvial.com probably.
Is that what it is?
Yeah.
Alluvial.com. Okay, yeah, so just for clarity, Alluvial was like the initial company, and now Liquid Collective is going to be the entity that actually represents the protocol. So
that's great.
Yeah.
Ben Spiegelman and my boy Curtis O. Thank you so much, gentlemen. Thank you for coming over to London. Great fireside chat. Well done. Thanks so much.
Thank you.